Welcome to the Business Finance Bulletin. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, incentives for RBS customers to switch banks, PayPal small business loans proving to be a hit, and 3 growth priorities for small businesses. In the previous bulletin, I mentioned that 3 banks in the UK were set to benefit from a total pot of money amounting to £280 million designed to improve competition in the banking sector. Now, that money was coming out of a total fund amounting to £775 million and has been set aside by RBS as a condition of the UK government's bailout. Now, this fund, under the Banking Competitions Remedies Programme, has now announced a further sum of money which has been allocated, totalling £350 million. Now, this £350 million pot is designed to encourage a number of RBS customers to move away to other alternative finance providers, again designed to increase competition. And there are estimated approximately 110,000 business customers who are likely to be approached. Now, there are 11 banks which are vying for your business if you're an RBS customer. And those banks, they are names such as Santander, Handelsbanken, Co-op, TSB, Metro, Starling Bank. Now, some of those names may be familiar, some less so. So what are they going to be doing? Well, essentially, they're going to be vying for your business. And that pot of money of £350 million is going to be used to incentivise those customers to move. In other words, particularly if you're a large borrower with RBS, you could see yourself in receipt of a significant windfall in order to encourage you to move. So if you do get a letter from one of those providers, it's not a scam. Take a look at the deal and see if it works for you. And who knows, in 2019, you could end up with a nice little cushion of funds to see you through the year. You know, one purpose of this bulletin is to share news with you from the alternative lenders out there and some update news from alternative lender PayPal. Now, hang on a second, you may think, what, PayPal's an alternative lender? Yes, it is. Since 2014, PayPal have been offering businesses loans via their working capital loan product. Now, you may think, how does this work exactly? Well, first of all, PayPal have just announced that they've lent out £1 billion so far through that fund since it was launched in 2014. And over the last 12 months, that has increased by 60%. So you can see it becoming quite a major player. So how does it work? Well, if you use PayPal to process all your credit card receipts, you'll understand that PayPal can see exactly what you're doing on a monthly and yearly basis. So what PayPal do, they'll take a look at your average monthly turnover and then they'll work out a figure that they will lend against that monthly turnover. So there's your loan. How do you pay it back? Well, PayPal will agree with you a fixed monthly percentage that they will take from each credit card receipt. So yeah, they'll take a fixed percentage every time a credit card payment comes in. Now, this is great news for you because it evens out seasonality. So with a traditional loan, you've got the same amount being paid every month. Whereas here, let's say it's 10% they take of every credit card. So it's 10% of a very high credit card month and 10% of a very low credit card month. So it really matches your cash flow in terms of what your sales look like. A great way to even out seasonality. So if you are a PayPal customer and you want to know more, just log on to your PayPal account and look for the working capital loan button and there go through the application process and see if you're eligible. Despite the political and economic issues going on around us, it's heartening to hear that many small business owners are still feeling optimistic about their prospects. That's a finding from the recent survey carried out by Hitachi Capital Business Finance. They spoke to many business owners and 68% of them have said that they are planning to grow their business over the next 12 months. So what are their top 3 key growth priorities? Well, priority number 1, keeping control of costs. Yep, they realise that their fixed costs in many cases are increasing. Higher rents, higher rates, increased electricity costs. So their number 1 priority is to make sure that they are regularly talking to suppliers to get the best deals and constantly looking at overheads to make sure that all those costs are necessary. And if not, cut them out. Priority number 2, keep on top of cash flow. Perhaps not surprising, as we know it's a regular feature in this bulletin is the effect of late payment. So business owners who are going for growth realise the importance that cash flow has in funding growth. And the third priority is kind of increasing their business footprint. They're looking to expand markets, look overseas. They're also looking to hire staff and invest in new technology as well. So there are top 3 priorities for those growth businesses. My question to you, what are your top 3 priorities? For another bulletin. As ever, I hope you enjoyed it, and if you did, please don't forget to give it a like and a share. So that's it. Look forward to being with you next time. In the meantime, have a great, successful and profitable week.